In 2025, as you sip your coffee and scroll through headlines, the big question looms: real estate or stocks? It isn't just a debate, it is a battleground for dreams of financial freedom, as both asset classes promised unique paths to wealth. But here's the twist. The stakes had never been higher. Rising interest rates made mortgages costlier, while inflation loomed over the stock market, sparking volatile swings. On one hand, savvy real estate investors eyed suburban growth fueled by remote work trends, seeing rental properties as cash flow machines. On the other, tech enthusiasts leaned into stocks, captivated by AI-driven innovations and global diversification opportunities. In this video, we're diving into the heart of this clash. We'll uncover the strengths, pitfalls, and potential of both investment strategies. But to truly understand whether real estate or stocks reign supreme in 2025, we need to rewind and explore what makes these assets so compelling, and why the decision might be less about markets and more about you. 1. The state of real estate in 2025, a changing market. The real estate market in 2025 is likely to be shaped by several key factors, including high interest rates. Central banks around the world, particularly the Federal Reserve, are expected to maintain relatively high interest rates in 2025 to combat inflation and stabilize the economy. Higher borrowing costs could make mortgages more expensive, which could slow down housing market activity and reduce affordability, particularly for first-time homebuyers. Remote work and shifting demand. The COVID-19 pandemic has permanently shifted the way people work. As remote and hybrid work models continue to be prevalent, demand for properties in suburban and rural areas is expected to remain strong, while demand for office space in urban centers may decline. Although remote work has caused some shift in demand, urban areas continue to attract people due to better job opportunities, social amenities, and educational institutions. However, some cities could face challenges as the cost of living rises. Rising construction costs. Construction costs, driven by material shortages, inflation, and labor issues, are expected to continue rising in 2025. This could reduce the supply of new homes and properties, creating an opportunity for investors who own real estate assets. Benefits of real estate investment in 2025. Steady cash flow. Real estate, particularly rental properties, can provide a stable income stream. In 2025, demand for rental properties may rise as home ownership becomes less affordable due to high mortgage rates. Appreciation potential. Real estate has historically appreciated over the long term. Despite short-term fluctuations, property values tend to increase over time, particularly in desirable locations. Tax benefits. Real estate investors benefit from various tax deductions, including mortgage interest, property taxes, and depreciation, which can help offset costs and enhance cash flow. Tangible asset. Unlike stocks, real estate is a physical asset, which provides a sense of security to many investors. In times of economic uncertainty, owning property can feel like a more stable investment. Real estate typically requires significant upfront capital. While financing options like mortgages are available, investors still need to have a substantial amount of savings or equity to get started. Real estate is not as liquid as stocks. Selling property can take months, and transaction fees, brokerage commissions, closing costs can be high. If you need to access your money quickly, real estate is less flexible than stocks. While real estate tends to appreciate over time, it is not immune to market fluctuations. Local economies, interest rates, and unforeseen events, like a recession or natural disasters, can negatively impact property values. 2. The stock market in 2025, the changing landscape of stocks. In 2025, the stock market is expected to continue evolving, influenced by several factors. Higher interest rates. As central banks keep interest rates elevated to combat inflation, borrowing becomes more expensive for companies. This can negatively impact stock prices, particularly for those of high-growth companies with significant debt. However, high rates can benefit certain sectors like financials, which may see higher profits from lending. Inflationary pressures are expected to persist in 2025, which could result in increased market volatility. Companies with strong pricing power, such as those in the consumer staples or energy sectors, might be better positioned to weather inflation. As industries continue to embrace AI, automation, and other technologies, investors may see tremendous growth opportunities in tech stocks, particularly in AI, green energy, and biotech sectors. Investing in international stocks provides exposure to markets with different economic conditions. For example, emerging markets might offer higher growth opportunities compared to developed economies, but they also come with higher risks. Stocks are highly liquid, allowing you to buy or sell shares quickly without incurring significant transaction costs. If you need to access cash, selling stocks is far easier than selling real estate. The stock market offers a broad range of investment opportunities, from large-cap companies to small startups, across a variety of industries. Diversifying your investments can help manage risk. Investing in stocks can be done with minimal effort, especially if you choose passive investment strategies like index funds or exchange-traded funds. This makes stocks an attractive option for hands-off investors. Unlike real estate, stocks do not require large amounts of capital to start investing. You can buy fractional shares or invest through retirement accounts, like IRAs or 401ks, to get started with relatively small amounts of money. Historically, the stock market has outperformed many other asset classes, including real estate, in terms of long-term growth. If you're investing for the long haul, stocks can offer significant appreciation, especially in high-growth sectors. Drawbacks of stock market investment in 2025. The stock market is known for its volatility, especially in times of economic uncertainty. In 2025, ongoing inflation concerns, geopolitical risks, and economic slowdowns could lead to periods of sharp market declines. Stocks can be influenced by short-term sentiment, making it easy for investors to make emotional decisions in times of market downturns. Panic selling or buying based on fear or hype can lead to poor returns. Stocks are highly liquid, making it easier to sell and access cash. This flexibility makes stocks a better choice for those who anticipate needing liquidity in the short term. Both real estate and stocks have their merits, and the best choice for you in 2020 depends on your personal financial goals, risk tolerance, and investment horizon. Real estate can offer steady income and long-term growth potential, but comes with high entry costs and illiquidity. Stocks, on the other hand, provide liquidity, diversification, and potential for higher returns, though they are subject to volatility. A balanced approach that combines both asset classes can help investors leverage the benefits of both. If you're starting out, consider building a foundation in stocks to take advantage of lower entry costs and liquidity while gradually diversifying into real estate as your wealth grows.